Picture this. It's a normal Tuesday. You're scrolling your phone when suddenly the internet flickers, your banking app freezes, and a weird quiet descends outside. It sounds like a disaster movie, but this is the real ghost story haunting the US Treasury. Our biggest international friends, the ones who've bankrolled our lifestyle for decades, have stopped answering our calls. This isn't a doomsday fantasy, it's a quiet crisis, unfolding one auction at a time in Washington, D.C. For years, the US was the hottest ticket in finance. Countries like China and Japan lined up to buy our treasury bonds. But now, the stadium is empty, the cheering has faded. We're left on stage, wondering where everyone went. Those empty seats aren't just embarrassing, they're a direct threat to your wallet and your future. The American way of life is built on the promise that someone will always lend us money. But what if our biggest lenders get a better offer? This is the story of the great financial ghosting of the 21st century. The bedrock of the global economy is quietly cracking, and the people in charge hope you're too distracted to notice. But you need to notice, because when the world's most important investors vanish, they leave behind a bill. And spoiler, you're the one expected to pay it. The music hasn't just stopped, the whole sound system is on fire, and it's time to ask who's holding the extinguisher. Let's be honest. US Treasury bonds sound as boring as a workplace safety seminar. But those boring IOUs are the secret puppet masters of your financial life. Think of them as the plumbing of the American economy, ignored until they burst. Treasuries are just government IOUs. When the US spends more than it collects, it borrows by selling these bonds. Investors buy them because they're considered the safest investment on earth. That safety sets the interest rates for everything else, your mortgage, car loan, credit card APR. For decades, the US was the hottest profile on the world's financial Tinder. Everyone wanted to swipe right, but now, our profile looks dated, our bio is full of typos, and our debt is sky high. Suddenly, investors are swiping left. When you get ghosted on a global scale, the consequences are severe. The government must offer higher interest rates to attract buyers, and those costs get passed on to you. Your mortgage, car payment, and business loans all get more expensive. Those boring bonds are about to make your life a lot harder. Ignore them at your own risk, because when the pipes burst, everyone gets soaked. Who's ghosting us? Our two biggest financial partners, China and Japan. For decades, they were the bedrock of our borrowing habit. Always reliable, always buying our debt. Now they're backing away. And it's not just one reason, it's a cocktail of financial anxiety. First, inflation. The US printed trillions devaluing the dollar. If you're China, holding US bonds is like watching your prize pumpkin rot. So they look for healthier investments. It's not personal, it's math. Then, geopolitics. The US and China are rivals, not friends. Relying on your rival to finance your government is a strategic risk. China is diversifying, buying gold, other currencies, and assets. It's a power move. Japan, too, is quietly reducing its exposure, worried about the dollar's stability. When these giants leave, they create a vacuum. Who buys all that US debt now? Increasingly, it's the US government itself and domestic investors, a pyramid scheme running out of new recruits. When you have to buy your own product to keep the price up, you're in trouble. The price we pay? Higher interest rates, a weaker dollar, and a future where America's financial dominance is no longer guaranteed. The world is moving on and we're left holding the bill. The consequences are real and they're coming fast. The question isn't if this will hurt, it's how much, and who will pay. Let's peek behind the curtain at the US Treasury auction, the scariest show in Washington. For decades, these auctions were a guaranteed success. Bidders flooded in, fighting for a piece of the action. But lately, demand is weak. The government has to offer higher interest rates just to get buyers. Imagine throwing a party and having to bribe people with free pizza to stay. That's what's happening. What if nobody shows up? That's the doomsday scenario, a failed auction. The US government can't borrow the money it needs to pay its bills, Social Security, military salaries, interest on debt. It would signal to the world that America's credit is in doubt. Panic would follow. Interest rates would skyrocket. The stock market would crash, it would trigger a recession deeper than 2008. Every treasury auction is now a test of global confidence, and we're already seeing failing grades. The question isn't if we'll have a terrible auction, but when. The stakes couldn't be higher, and the world is watching. To understand why our friends are ghosting us, look at our $34 trillion national debt. That number is so huge it's almost impossible to grasp. $1 million every 30 seconds. For years the world lent us money because we were seen as safe and reliable. But now the party's over and everyone's looking at the bill. Interest payments alone are one of the largest federal expenses. We're borrowing money just to pay the interest. Foreign investors see a nation with a spending problem and no plan to fix it. Political gridlock makes real reform impossible. We're paying for today's groceries with a maxed-out credit card, then opening another to pay the interest. It's a look that screams risk, and in global finance, risk is something you get paid to avoid. The debt isn't just massive, it's on a terrifying trajectory. Both parties keep spending more, not less. So why would investors keep lending to us? They wouldn't, and they aren't. America is waking up with a $34 trillion hangover and an empty wallet. Let's zoom in on our two ex-BFFs, China and Japan. For years, China parked its trade surplus in US Treasuries, keeping our rates low and our spending high. Japan did the same, seeking a safe haven for its savings. But now, China is playing a different game, selling US debt, buying gold, and investing elsewhere. They're de-dollarizing, insulating themselves from US financial pressure, and chipping away at the dollar's dominance. Meanwhile, the world is more willing to lend to China than to the US. This isn't just finance, it's a global power shift. Investors are diversifying, looking at emerging markets and tangible assets. It's a silent vote of no confidence in America's financial leadership. The US dollar losing its crown as the world's reserve currency is no longer a fringe theory, it's a real possibility. If that happens, the economic shock for Americans will be staggering. The empire isn't falling, yet. But the cracks are showing. So the government can't sell its IOUs, why should you care? Because the American lifestyle is subsidized by cheap global credit. When that disappears, reality hits, hard. The first impact higher interest rates. If the government pays more to borrow, so do you. Student loans, mortgages, car payments all get more expensive. The risk-free rate rises and the whole house goes up with it. Small businesses struggle to get loans. The economy sputters. Then comes inflation, part 2. A weaker dollar means imports cost more, phones, clothes, gas. It's a double whammy. Borrowing costs rise while the cost of living soars. Your paycheck gets squeezed from both sides. Could the US actually default? A formal default is unlikely, but a soft default is already happening. Paying debts with devalued dollars. Foreign investors see it and they're not sticking around. The real cliffhanger? What happens when the world stops playing along, the dominoes are lined up? This all sounds terrifying, and it should. But panic is useless. The greatest investors know crisis creates opportunity. Every major meltdown has minted new millionaires, if you're prepared and think differently. When everyone else is screaming sell, the contrarian whispers buy. The key is knowing what to buy. Now is the time to adopt a contrarian mindset. While others fear the dollar's decline, look for assets that thrive in chaos. Real estate, commodities, international stocks, digital assets. Don't abandon the American economy. Just recognize the world is changing. Reject fear and helplessness. You're not a victim, you're a participant. The decisions you make now will shape your financial future. Don't bury your head in the sand. Get educated, get strategic, and get ready. The coming wealth transfer will be brutal for the unprepared, and generous for those who see the storm coming. So, what's the plan? It starts with 3 steps. First, prioritize financial literacy. Learn the basics of money, investing, and inflation. Your education is your armor. Second, diversify your assets. Don't bet everything on the US. Think globally, and include real assets like real estate or precious metals. Third, act with urgency. The financial landscape is shifting fast. Procrastination is the thief of fortune. Start that budget. Open that investment account. Read that first book. Small moves now have big impacts later. But there's one more thing, the secret tool that builds true wealth, compounding. It's simple, powerful, and available to everyone. Understanding compounding is the final piece of the puzzle, and that's what we'll break down in our next video. So click here to discover the secret of compounding and start building your future today. The storm is coming, but you can build a better boat. Don't wait for rescue, start rowing, your future self will thank you.